You do have, in theory, the setup for much, much higher UniSwap prices over time should the protocol continue to grow, should it generate more revenue. And we think that there's a pretty supportive backdrop for that.
This has been a problem in crypto is they all have tokens, right? UniSwap token, Aave, we offer these on tastytrade, but there's never been a clear value accrual to the token holder.
It's still very early, even if maybe prices can get away from themselves from valuation metrics or fundamentals at times. So it's an environment in which I think you can feel pretty comfortable buying dips and taking some risk. But we haven't really seen that reflected in Bitcoin. Welcome. Dan, we're back, or maybe we're just getting started. It's a new year. We've got some new shows planned. This is one of them. We don't have a name yet. We got to come up with a name. So if anybody has any ideas, put it into the comments below. But there's a lot that we're going to talk through as we look ahead 2026. Dan, before we do any of that, how you doing, my friend?
I'm doing well. I'm excited for the show. We got a great setup here. I think we got a great format, really interesting. Something we've been planning for a little bit of, time talking about. So we're gonna give it a try. And I think as we go along here and as people, discover this content, we'll figure out a name. We'll figure out what works. But think it's just all reps and getting in and being consistent. So excited to do this. Excited to jump in. What we got today? Where we going?
Yeah, it's kind of like Dan and Ryan do markets or do trading for a while on the tastylive network. We've been known as like the crypto guys, good or bad. Some days it's great. Today, I think we're making some money. It's good to be a crypto guy. Other times, crypto guys, stay away from them.
Yeah.
We're going to go anywhere though. We're going to talk about what we're trading first and foremost. And that's not just crypto. It might be in crypto, it might be on chain, it's DeFi, but it also might be prediction markets. It might be sports bets. It's going to be thematic in nature for sure. There's a lot that I want to talk through related to AI. I think there's interesting energy investments as well, and many other topics that we're going to discuss. But that's the idea behind the show. Really go anywhere, do anything, real time, put the trades on, and there will be some transparency. We're going to track performance. Hopefully it's positive.
Yeah, and I feel like throughout our discussions, before we started the show and really planned it out, I've always noticed this trend recently where it is about trading anything. There's markets at anything. There's, you could price anything in today's day and age. I think crypto and crypto infrastructure, blockchain, whatever buzzword you want to use has enabled that, but it doesn't have to be just crypto, right? And, I guess here at Tasty, we have been known as like the crypto guys, or you've been the head of crypto, but I've personally had success with other asset classes, and I'd like to discover more of what's in the news, how AI works, how some of this stuff, prediction markets, sports bets, attention markets, internet capital markets, whatever you want to call it. I think there's a lot of opportunity there, and I don't think people cover it. And I personally trade it. I personally invest in it. I've done private investments. I've done VC investments. Small angel checks. Would love to even talk about how that works at some point. My main big wins have been in crypto. I felt like I always had an edge there, and I'd like to maybe share some of my thinking or with you on this show. So we'll try it out. And I will say I do like being the crypto guy, and I'll tell you why. Because most of the time, either people aren't bothering you, and I can do my own thing because I don't want to be bothered. I don't know if anybody knows.
Leave him alone.
Yeah. And then other times when the markets are ripping, they're like, oh, this guy's a genius. So it's a win-win, I think.
I like that perspective. What are you trading today? What's on your radar? Let's just jump right into it. Trade anything, go anywhere, hopefully make some money in the process. Are you making some money today?
I am. Portfolio's up. It's looking good, okay. Which is another thing we're going to have to do is we're going to have to share. I want to share a public sheet of, and I don't know how well we can keep this organized, but maybe ideas or things we would place a trade on or we have. Before we get into what I'm trading, I wanted to start the show off with kind of an interesting thing I came across in the news as it relates to trading, investing, markets. DeepSeek, you're familiar with the AI model DeepSeek that kind of got everyone rattled because it was this Chinese model that was cheap and somehow
It's like $6 million to train versus the billions of dollars that are being spent by these US, as we like to call them now, I guess, hyperscalers, but those are the big tech companies, Amazon,
Right.
Meta, Apple,
Right.
well, maybe not so much
The
Apple.
companies that run everyone's lives.
Yeah, the hyperscalers now.
Yeah. So this DeepSeek founder, so the founder who invented or spun out DeepSeek, the model, the AI model, his hedge fund posted 57% returns in 2025. So I found this on Perplexity. I use Perplexity to like aggregate news. So I just jumped into this headline. The hedge fund co-founded by DeepSeek founder posted one of the best performances among China's largest quantitative investment firms, potentially generating hundreds of millions of dollars in fees that dwarf the budget the startup claims it spent developing this model. So I guess this asset management firm is called High Flyer Asset Management, manages 70 billion yuan, which is $10 billion USD. It achieved a 57% return across its funds in 2025. Data was published by some consultancy firm, so I guess it's relatively accurate. So I thought this was really interesting because it's like they spent $6 million to develop DeepSeek, the AI model, and it potentially generated over $700 million in profits last year for this like quantitative automated hedge fund. So
they're using the model to trade the markets,
right,
and have obviously had a fantastic return.
Exactly. So
Chinese quants, I want to invest in that, right?
So do I. How do we get, how do we get into that? Apparently this fund stopped accepting outside investments years ago. So
of course,
we're probably too late. I wonder if there's a way to not copy, but on a smaller scale, apply that to what we're doing in some way. Maybe we can train a model. Maybe it won't, maybe we won't return $700 million, but maybe something on our scale.
When you look at the percentage return, 57%, it's massive. But you can do that if you take a ton of risk, of course, if you're concentrated in a handful of names. I'm assuming and curious if you know like anything about the strategy. I didn't read all the way through the article, but what were they trading? I've got to imagine it's AI related if this is the DeepSeek hedge fund, essentially.
I'll read. High Flyer's investment approach is rooted in artificial intelligence, relying on deep neural networks to analyze market, macro, and alternative data. So to your point, like they haven't really given us, I don't have a list here of what sectors or specific companies, but I mean, how hedge funds work is they take a shit ton of leverage and usually it's pretty concentrated, or they run multiple books, multi-asset strategies. So I'm guessing, they were using this at its core. This AI model was recommending certain themes or certain quantitative driven approaches. Maybe we'll dig into it a little bit. Maybe I'll dig into it a little bit more and come back, but just thought it was an interesting headline and something that we should think about, because I think AI is increasingly going to be driving a lot of market decisions.
Oh, absolutely. I mean, you started off with, look, I use Perplexity for some of this research, and that's just one tool. I don't think there's a scenario where most people that at least are informed, right, is they evolve their investment process, their approach to markets, they augment it with AI. I've found myself, I know you do this, a lot of people here now do this, you're using these tools to perform research, to analyze data sets, to just be better informed or to make decisions more quickly. You're seeing it embedded in the trading platforms themselves. And I think it's definitely going to shift the way in which we participate in markets. It'll be less, in my opinion, kind of point and click through trading software. It still might be mobile, but the way that you interact with these applications, I think, is going to be a lot different.
Right. I think it's going to be a lot more machine driven.
Yeah.
It already kind of is, but it's not going to be like manual point and click. At least, some of that's going to go away, I believe. So
DeepSeek's using AI to run a hedge fund, or I guess the founders, the people behind DeepSeek, are making some money. You're doing research with AI. What are you finding? What's on your radar, man? We look ahead. There's going to be a ton that we talk about throughout this show in terms of themes, trade ideas, but start of the year here into 2026. Markets are kind of near all-time highs as we're recording. But what is interesting to you, whether that's themes, and again, sticking with this show, go anywhere, trade anything, what that's on your watch list?
Yeah, I mean, specifically for what I wanted to talk about today was this DeFi fee unlock. So, you know, taking a step back, I think where I'm focusing is on revenue generating protocols and where attention's flowing in crypto specifically. That's been my bread and butter for the last couple of years. I understand that market. I feel like I understand how narratives have shifted. It is kind of like a boom bust, hype cycle driven market, but underneath that, there are revenue generating, high usage, growing, protocols, right? Growing projects, and with some of the regulatory clarity, with some of the infrastructure that's been built out, I think now we're seeing an inflection point for crypto going from either this is a scam or meme coins to basically having real value and real usage. So I'm paying attention to that. I'm also paying attention to defense stocks and some of the broader defense tech stuff. So can get into that in the future. Energy, which I'm curious to hear your thoughts on. We'll get into that on the crypto AI mining stuff. And I think prediction markets and generally like this idea that anything can be a market, attention can be a market, sports outcomes can be a market, economic outcomes can be a market, political events, and private investments too. There's a couple platforms that are tokenizing or allowing access to VC type investments, let's say private companies or startups. I think that's really interesting. I think in the past, the general viewpoint has been like index or, automate your 401k and don't worry about it. You're not going to beat the market. Or, you as an individual don't have good enough information. Don't try type thing. Or it's been like, yeah, actively manage based on these rules, point and click, do all this stuff. And, I just think personally, I don't think there's any opportunity there. And the opportunity is to find information that other people don't have and act upon it before other people find that information. So that's been my view. That's how I've viewed markets. It's front running others. People don't like that word. That's how it works. So,
Well, I mean, I think that's how it works in business, right? If you find an area or an industry where profit margins are X, you have a competitive advantage, maybe there's just not a lot of competition, you start to participate in there, that's going to attract more competition. You're essentially front running that competition at times. You have information. It's not something where you're doing anything illegal, but you want to be in the right things before the crowd. That's what was always interesting to me about, well, a couple areas of the market. One clearly has worked, the other not so much. But two areas to call out would be crypto and on the other side, or some other world, cannabis stocks. Both areas where, for one reason or another, largely tied to kind of the lack of regulations or not a lot of clarity or rules at the time, you as an individual or retail investor, you could front run those larger institutional pools of capital. Certainly saw that in crypto, right? If you were in early, you're able to front run the flow. Look where we are now. And the same thing might exist with cannabis companies. I mean, they have completely underperformed, but an area where there is not large amounts of institutional capital. And if you wanted to position as a retail investor, you could potentially front run that if it were to materialize. So that's the name of the game. Dan, I want to go back to some of the themes that you talked about. Again, we will go anywhere, trade anything. And I think to your point, tokenization will facilitate that. You'll have more opportunity going forward. The product space will broaden. But let's go back to DeFi.
okay.
You're focused on that right now. You're talking about, increasing value and growth there. Maybe that gets returned to token holders. I want to understand why now, because when I look at protocols like Aave, UniSwap, it's not that they haven't been growing their revenue streams. It does ebb and flow, but it's mostly up and to the right. We're seeing more people use these services. And for anybody that's not familiar with DeFi, I kind of think of it as just, financial services that are on a blockchain network. More and more so going forward, you probably will have to register and there will be some form of KYC. We'll see what happens here in the US in terms of the Clarity Act. But it's just decentralized financial services. They've been growing. More people find out about them. They use them. There's value there. Revenues are increasing. Why now do you think there's an opportunity in some of these names?
Yeah, well, I think it's this just this kind of inflection point in the industry where, you know, DeFi is relatively new, right? Like UniSwap, which is the number one decentralized exchange, which facilitates tokens without a central limit order book, facilitates token trading without a centralized order book or market makers. That only launched in 2018. So like we're not even 10 years into this, right? So over the last whatever 7 years, we've seen a lot of iteration and I guess infrastructure development to where it's easier to use these things. It's easier to access. They're more accessible. They're more trusted. They've gone through the rigors of being tested in the public, right? So I think number one, where time has allowed us to develop good products. Number two, I think there's beginning to be regulatory clarity on this. There's beginning to be, especially in major countries like the US, Europe, Asia, they're beginning to accept and view these as legitimate marketplaces and legitimate products. Number three, I think investor appetite and the makeup of investors has switched, right? Like I think as more Gen Z, millennial, younger people that are digitally connected, they're more willing to overcome what the perceived barriers of getting into crypto was. And, if they want to trade a hot token, they don't care. They'll download a wallet. They'll figure out Uniswap, right? It's all there, right? So I think like we're reaching that point where time and regulation, government, whatever that evolution looks like, is allowing us to access these products easier. I think when I look at crypto, there's always been this thought that there's no value here and there's no use case, and whatever argument you want to make from outsiders that really lob insults at it. I think at its core, what DeFi is open source markets, right? Open source financial services. Anybody should be able to access with a phone or an internet connection. And I think that's been the core, right? That's been the core idea, that there shouldn't be middlemen that are gating things. There shouldn't be certain rules that are embedded for incumbents and other, certain players to basically create walled gardens for financial products. The core foundation of DeFi was open source financial services that anyone with an internet connection can access anywhere in the world. Now, to your point, there's going to be rules. There needs to be rules. There needs to be regulations. There needs to be some form of KYC, whatever that looks like. But at the end of the day, these exist. They can't be taken down. They exist on a blockchain. You can access them. So I think that's a very powerful idea. I think DeFi in particular, this sector, is one of the only places in crypto that has actually, underneath the surface, generated a ton of usage and a ton of sustainable usage and, a lot of participation. So there's value and revenue and whatever financial metric you want to point to users that use these things every day. Now, this has been a problem in crypto is they all have tokens, right? Uniswap token, Aave, we offer these on tastytrade, but there's never been a clear value accrual to the token holder. So unlike in traditional equities, right, to the traditional markets, equity markets, that at the end of the day, cash flows should flow back to equity holders in some capacity, right? Like whether that's reinvestment in new initiatives or a dividend or whatever have you, growth. There's ways to there's accepted ways to value that. If you hold equity in a company like Apple or Nvidia, you as an equity holder are buying future cash flows, right?
You have a share of the company.
Right. That wasn't the case in crypto and for a long time, right? There's always been this question or this like separation between token holders and then some centralized entity that ends up collecting all the fees because we couldn't call token holders equity holders and there was regulatory capture and lawfare and all this ambiguity, right? And investors don't like risk, especially big investors don't like uncertainty, or, undefined risk. So you could never really assign value. There could never really, like, these DeFi protocols could never really say, hey, a certain amount of our revenue is going to flow back to the token holder in some value, like some value capture for the token holder. So these things have always traded on narratives or speculation. There never was like a fundamental analysis that you could do. People have attempted, and there's obviously investors out there that are waiting and buying, and you could do some type of DCF or whatever model you want to use, but there was never, due to the regulatory clarity, there was never alignment between token holders and the actual protocol or product that was generating these fees. So fast forward to a couple months ago, I think end of November, December, UniSwap, which has processed around $4 trillion since it's launched, which is nothing to shake a stick at.
And I'm seeing 2.5 billion in fees.
Right.
You can think of that as revenue.
Right.
That was generated in the last 3 years. So very real, to your point.
Right. So the founders who run something called UniSwap Labs, which is the centralized development company that launched the UniSwap protocol, that's governed by the UniSwap DAO, right? So the way this is structured is that the protocol is the code that facilitates the markets. The labs entity is the LLC in the States that hires the marketers and the developers to do work as like the main brand for the protocol. And then there's a DAO element. And you can think of the DAO element as like governance, like the board or whatever. Now, that's his simplified way to look at it. It's not really like that. There's service providers that plug in and build front ends, or they facilitate certain services for the protocol. So there's this ecosystem here, right? The protocol, and when you refer to protocol, it's referring to code, right? The code on the blockchain that you can view. Can't be can't be changed, can be upgraded, but can't really be changed at a base level. No single actor can come in and delete the thing, right? There's usually a centralized entity that houses the brand and the whatever, the IP, whatever you want to call it. And usually it's pretty aligned with making sure the protocol functions. And then there's, as it gains traction, there's a DAO, and the DAO is kind of like just this ecosystem of token holders or vested interests or people that want to help continue to develop the protocol as an open source protocol. And they have some type of voting rights by holding tokens. So it's kind of confusing. The legal setup was always kind of ambiguous. Nobody really knew who should control the fees that's generated. Up until now, the UniSwap Labs, the centralized entity, took most of it. And the token holders were kind of there to maybe vote on certain things or propose certain things that would make the ecosystem better, this protocol better, but there was never a clear value accrual. So the founders, which are part of the UniSwap Labs, and then certain UniSwap Foundation DAO holders, which govern the protocol, they announced a proposal that was to turn a protocol fee switch on. So embedded in this protocol is the ability to route fees to token holders or some type of value accrual mechanism. So that proposal went up on the governance forum back in November and was passed late December, sometime in December. So really what I think that does is it's one of the first steps toward clarifying this token holder value accrual question that has always plagued DeFi and I think in general crypto projects, right?
Because as I understand it now, and this has passed, we wrote an article about this on tastycrypto.com. So you can head over there and you can see the Uniswap unification free proposal analysis that we did. We put a base case and a bull case together in terms of the impact over time, potentially, on the Uniswap token price. But what this does is it now directs a portion of those fees. We talked about the 2.5 billion in fees that have been generated by the protocol that comes from people swapping tokens using the code base, as you described. Portion of those fees will now go to burn tokens. And ultimately what that does is it removes the circulating supply. it reduces the supply in the same way that you see companies do this through share buybacks, right? And so then it should, in theory, make the remaining tokens that are outstanding more valuable in the market should the protocol continue to experience revenue growth. And that's what this is all predicated on. But I think to, some of your earlier points, that's what we're seeing is increased usage. This is predicated on increased future adoption, but we're seeing that show up in the data. We think it's still relatively early. UniSwap launched in 2018. DeFi summer wasn't really until 2020. So if you get to a point where the UniSwap protocol, and we can talk about a couple others too, because I want to throw out a handful of names here that people should start to at least look at or put on their watch list that could have a similar setup to UniSwap. UniSwap has kind of taken all of the attention at the moment, but there are a couple other protocols we'll talk about. But if you just look at, potential growth in the UniSwap protocol, and let's just assume that, it does grow, if you get to a point where by the end of this decade, UniSwap is generating closer to 4 billion or maybe doubles its revenue that it experienced in the last 3 years. So a substantial jump here. But let's say it does 4 billion in revenue, 5 billion in revenue in 2030. You could get to, assuming, you have certain price revenue ratios that are maintained in the marketplace, you can get to a $35 UniSwap price. It's $5.50 or so here today. In our bull case, which really assumes multiple expansion and closer to 9 billion in revenue, I kind of chuckle because the estimated price then, or the forecast, is closer to like $95, $100. So point being, whether you get there or not, given this fee switch and what happens as a result of it now, which is live, you do have, in theory, the setup for much, much higher UniSwap prices over time should the protocol continue to grow, should it generate more revenue. And we think that there's, a pretty supportive backdrop for that. Beyond UniSwap, what other names come to mind where they're either doing something similar or maybe just starting kind of at the base level? What protocols are real? What else is out there that's generating significant revenue month over month, quarter over quarter? What are you seeing?
Yeah, so I think in crypto in general, there's always this, like, they call them primitives, DeFi primitives, which are like your building blocks for functioning services, financial, social, otherwise. So you have Uniswap as a decentralized exchange, right? Your decentralized NASDAQ, New York Stock Exchanges, etc. You also have money market lenders or borrow lend protocols, which are basically banks. You can deposit and earn yield, and you could borrow at a certain rate if you want to go out and obtain leverage and, try and find value, yield elsewhere. So the one that is the most popular that I'm paying attention to is Aave protocol. And Aave is a borrow lend platform, launched around the same time, I think, Uniswap, but really didn't come into its own until 2020, DeFi summer. And they are going through this, like, kind of evolution in their governance, right? So that is one where I think what they're doing is interesting because they're also trying to bring this to the mainstream, right? They're trying to bring this idea of decentralized finance to the mainstream. They've just launched a consumer finance app, which allows you to save in stable coins and earn a way better yield than you would at a bank.
Yeah, I've seen the yields that they're advertising, and that's predicated on you go out and you refer friends and you kind of,
Right.
it's gamified in some way, but it's close to like 7-8%,
Right.
at least for now, right?
So
Variable, but
yeah, so this is set up a similar way as Uniswap. It has a nonprofit foundation, a DAO of token holders and service providers into that protocol, and then a main centralized operating entity that the founders and original creators own. So same discussions happening, right? It was a question of where fees for this protocol should go. This kind of popped up where there was some on-chain sleuths found some transactions for fees to go directly to the centralized entity and kind of bypass token holders. So this caused this big governance discussion, and actually the token took a hit over the last couple weeks. I think it's recovered now, but it got down to like 130, 140. So
Yeah, I've got it at 178 right now. So all
Yeah.
of those 140 lows. But for context, this has been closer to $400.
Yeah. So again, there's a community of users, service providers, and other vested interests that use the protocol. And then there's the protocol, the code itself, and then this Aave Labs, which is the founder's centralized entity. So, I'm reading the governance form here where the community is operating under the expectation that there's alignment between contributors and the DAO. Um, Aave Labs, a centralized entity, has been considered a good faith steward of, the brand. But I think with that came, this idea where like fees just weren't flowing to token holders. There's no way to value it. Service providers that have been contributing for a number of years aren't seeing value. So they've kind of brought this discussion to the light and really want clarity on how this protocol is going to win, how token holders, the centralized entity, and the DAO, which governs the whole thing, can align. So, without digging too much into it, we can post if you really want to read through all the governance stuff. But there's this kind of discussion around alignment, and I think that goes back to like what UniSwap was trying to do: is token holders, how does value accrue there so that you can hold the token and make money. I don't know, the token goes up. How do service providers continue to contribute to the protocol and make it the best product ever? And then you want to know what the founders, whose sole goal is to help it win and reach mainstream consumer finance. So this in particular is one I'm taking a long-term bet on because I like the founder. His name's Stani Kulichov. I'm probably butchering the last name, but it generates a significant amount of sustainable revenue, and they're trying to reach mainstream. They're trying to be a mainstream consumer financial product. They're not just trying to like sit in the crypto niche and collect fees. They're actually trying to launch things that can fulfill that promise of DeFi, right? And reach mainstream consumers. So, I've been watching this going on. I bought some of the token when it dropped, and it seems to have recovered. It's back up at 178. It got down to like 130, 140 rather, back in December, and it's recovered a bit. And so, just another one I'm watching. Founder went in and did a $10 million buy. He published this big article on like how it's going to win, right? And like, I think you want to be betting on founders, right? I think that's like always been an issue in crypto, is like people get scared because there's like anonymous they think it's like anonymous shady coders, and there's an element of that, right? But I think that there's some really legitimate builders here that want to see their products win and want to bring it to the mainstream. And that's one in particular I think is positioned to win and has strong founding leadership that's continuing to build. And I think one to bet on, at least I'm betting on.
Yeah, I think that makes sense. I mean, whether that's VC or it's public markets, I mean, you're ultimately betting on the ability of leadership to execute on the strategy to return value to shareholders, to grow the business, etc. I think this is a really interesting idea, Dan. I mean, for both of these, Uniswap, Aave, we look at the charts, price action has been pretty poor recently. It's been in line with the drawdowns that we've seen in other parts of the crypto market post the October liquidations. But if I just look at where we are, right, we're at 178 in Aave right now. You have fundamental catalyst here, possibly have regulatory kind of tailwinds, let's call them. And if we look at some price levels, you go back to when was the last time you really just saw a massive risk off move across the board? And that's not just in crypto. But the last time we really saw that was going back to the big tariff announcement day in April of last year. And Aave traded all the way down to, we'll call it about 115, 120. You had the October liquidations where about $20 billion in leverage came out of the market. Nothing was immune at that point in time. Some of these candles are just crazy. The candle for that day is pretty wild, because you go from an Aave 270 down to 130 in the matter of like an hour. But that's also the low. So we've been finding some buyers, or there's been a bid. Let's just say the low end of that range is kind of 115, 130-ish, 150 maybe. And top of the range is closer to 400. You're at 178 right now. Same thing with Uniswap, right? This is $5.80. it's been as high as into the end of 2024, almost as high as $20, and has been up there a couple times previously. If you go all the way back to inception, Uniswap token, and definitely a different market environment at the time, traded closer to 45. That said, $5 seems cheap relative to these catalysts. You're betting that it all works out perfectly. And I think, again, there's probably still, while you're seeing these protocols move towards mechanisms that can return some value to the token holders, it still doesn't mean that there isn't regulatory risk. At some point in the future, there could be, but it seems like we're also on the other side of that.
Yeah.
We'll see.
I also think that the helpful context away from what you just mentioned too is like, we still don't know how to value these properly, because like I see Aave sitting at a $2.6 billion market cap, but when I look on DeFi Llama and some of these data dashboards, the annualized earnings are only at like 70 mil. Like, does that justify, like, do we know if that justifies a $2.6 billion market cap or whatever valuation? Even Uniswap at, what's that, $6, $5, $6. If you compare it relative to its peers, it still looks overvalued. So I think that there's still a question of like, sure, we're getting clarity and these have real users and revenue, but are they overvalued still?
Right.
You know what I mean? So I think we'll see that clear up. And there's a lot of analysts out there that cover these. And Blockworks put an article out and kind of was comparing Uniswap to peers like Aerodrome, Jupiter, other dexes and exchanges. And I think, that article is trying to make the case that Uniswap still seems pretty overvalued when on a relative valuation basis, based on, annualized revenue, fully diluted value, market cap, etc. And then it goes into like ratios like fully diluted value to sales and market cap to sales, and it showing Uniswap pretty overvalued relative to its peers. So there's that question. And I think it just kind of gets back to like, how do you value these? Me personally, I think that's an important discussion to follow. I don't feel like I'm a spreadsheet cruncher that needs to like run that model every day. I'm just betting that these things continue to grow and the value will accrue and there'll be clarity around that. And I'm okay holding it for a while.
Yeah. I mean, this is Dan and Ryan do markets. We're simple guys, right?
Yeah. I don't think you need to like, there might be ways to say like, oh, wow, XYZ protocol is undervalued relative to the main one, Uniswap, and maybe that's the opportunity is to buy the undervalued one because it's growing more or whatever. But like, I don't know that I need to do like complex discounted cash flows on these things.
Yeah, completely agree. It's a way to express a view on a theme. I mean, you could argue that there's this winner take all kind of first mover component to it. Uniswap is much bigger than some of these others. I'm not saying that that's necessarily the case here, but you could make a similar argument around like Ethereum or EVM L1s. Ethereum maybe looks overvalued relative to others, but will those others be around? I mean, we'll see. I think that whether you start with Uniswap, Aave, or you go somewhere else, the macro trade or the idea here is that you're just betting on more people using DeFi and DeFi protocols generating more revenue, and those protocols coming up with novel ways to return some of that value to shareholders. And if you start there and you know where to look, then definitely you go and do the work on Jupiter or Aerodrome or anything else, right? Uniswap's not the only decentralized exchange. And you might find that, well, here's a better way or a more interesting way to express that trade.
Sure. Yeah. And I'll wrap this up because I want to get onto your the crypto miner to AI pivot, because I think that's a really interesting idea that you've been researching for a little while. But I just want to wrap this up on kind of like what the big picture is here and like what protocols are primed to grow, what DeFi protocols are primed to grow. So I view it as like a big kind of inflection point, right? So DeFi protocols have tripled the share of fees distributed to token holders in 2025. So before 2025, only roughly 5% of protocol fees went to holders. 2025, that increased to 15% are now distributed to holders. And this is not like traditional markets, right? There's no dividends or whatever. It's in the form of buybacks, burning tokens, which is reducing supply on the market, which increases value, and then revenue sharing versus like inflationary token rewards, right? So I think all that being said is you're getting regulatory clarity post Gensler SEC. Your protocols are achieving sustainable profitability without relying on token games, and then low gas fees and scaling on layer twos and Solana are enabling mainstream adoption, right? So, and then governance. I think governance does work, right? As much as people say like, oh, DAOs are stupid, or this concept of like community owned open source product, like that works. That does work, right? Like people can band together and pass, make it so that incentives are aligned. So we can publish a list of tokens that we're looking at that fit this idea. I can rattle off a couple. Obviously, UniSwap, token UNI, Aave, AAVE, Hyperliquid, which is a perpetual futures derivatives exchange, Hype, HYPE, Sky, which was formerly called MakerDAO, rebranded, Jupiter, which is a Solana one, and Maple Finance, which is like an institutional credit market. So those are 6 that I think you could pay attention to that fit this theme. There's a dozen others, and we will probably publish, a list or a watch list or something we probably can come up with to make it easier for the viewers to follow. But yeah, that's early 2026. That's something I'm following, and I think an inflection point in the industry that will be interesting to see play out.
And I think we should do a deep dive into each one of these on a future show, and also talk about how you can use some of these, right? Because while up until now, there hasn't been a way for token holders to passively participate in the revenue generation from a protocol like Uniswap, there is a way to directly participate actively by providing liquidity to a decentralized exchange, and the yields there are quite juicy at times, Dan, as you know. So we'll talk about that on a future show, but let's switch it up a little bit. Where else do you want to go? We talked DeFi, the value unlock, revenue and value accruing to token holders here presents a potential opportunity. What else are you seeing? What else do you want to talk about?
I want to pass it over to you and talk about this crypto miner to AI energy producer pivot. You're calling it the big pivot. I want to hear this, because I feel like you've done a lot of work on this and it's probably laid out in a really coherent way. So why don't we dig into that? What's going on with the crypto miners?
I've done a little bit of work, okay, I suppose. But yeah, you look at just the almost exponential gains that you're seeing in a lot of these AI related names. The one that comes to mind for everybody, of course, is NVIDIA. Do you have any NVIDIA?
I don't.
I sadly didn't participate in any of that.
I know.
But that's been a trade that's worked well for, multiple years now. So I kind of felt like, all right, I'm late to the game. And then every time you look at it, the price just goes higher and higher. And you've got, the angel devil on each shoulder. But overwhelmingly, there had been, at least up until recently, you got a correction. But there's this view that, there's this massive bubble, right? I think Michael Burry shuts down his hedge fund to start a Substack and is writing about the massive AI bubble, which gets a lot of attention. And I think, we should be right at times to question valuations. But at the same time, when you really start to dig into it, to me, it does seem like it's still very early, even if maybe prices can get away from themselves from valuation metrics or fundamentals at times. The 5-year outlook, I think it's more spending on AI infrastructure and then what goes into making this a reality, right? So the more time that I spent thinking about that, or anybody that starts to look into this, very quickly realizes that on one side, you have this massive growth in demand for data centers and cloud compute, the GPUs, that's NVIDIA, the memory, Micron. And again, you can see the stock prices, they're at all-time highs for the most part. So you kind of get that. But in order for any of that to work, you have the other side of this equation where there's massive energy requirements. And arguably, the state of the grid in the United States can't necessarily support where demand will be in the future. You're going to need more sources of energy for this. It needs to be renewable. It needs to be cheaper. I think that's solved for, but that's kind of the other piece to it. And then there's a lot of like picks and shovel plays as well. So we want to talk about all of that at some point. Kind of fits broadly into this theme of AI infrastructure. Of course, again, NVIDIA is there and there's many players, but there's many opportunities. It's not just NVIDIA. And so starting there and sticking with the crypto theme, I noticed, and I think more and more people are noticing, that a lot of these companies that started out as crypto miners are pivoting in some ways to diversify their revenue so that they're generating revenue not just off of mining Bitcoin, which has, a declining profit margin. And now they're providing cloud clusters for AI compute, high performance computing. So using the GPUs that previously were used to mine Bitcoin and repurposing that. And the margins on that business are much more profitable.
Gotcha. So before we go on, let me just kind of summarize what I think your thesis is, or what you're pointing out is that the NVIDIAs and some of these like higher maybe end to consumer companies require like energy at a base level, like energy and compute. Or
well, more so the AI theme has many different ways that you can play it beyond just data centers and what goes into the data centers. So I kind of deviated a little bit there. We talk about, okay, where is the energy going to come from that powers this? What are the component pieces? What are the software services, right? You can even get into kind of like the real estate component of it.
Yeah, so like if you get back to the fundamentals, is like before all this AI tech is enabled at a base level, we need a bunch more energy and power, and we need infrastructure that can tap into that. And these crypto miners, which had been somewhat profitable in mining crypto, can now change what they've built already to service this higher margin, higher growth area.
Yes, yeah. My point is really there's a lot of ways to play the AI theme beyond just NVIDIA, which is at the top of everybody's list. And then when you look at what's happening in crypto and what's going on with crypto miners, that presents a potential way through some of these names to kind of have that AI exposure. And so here's what we're seeing happen, right? So to mine Bitcoin, you need basically two things, let's say. You need a lot of GPUs, so you need a ton of computing power, and you need cheap access or access to cheap energy, I should say. And so when you look at market conditions as they have been for some time here in crypto, it's been downtrodden. I wouldn't say that we're in some sort of like crypto winter or it's a full-blown bear market, but we pulled off of all-time highs and had a 30% correction, and it just hasn't been as exciting as it is for other areas of the market, right? People's attention is on precious metals at this point in time. Regardless, you're going to have more halving events. It's going to become more competitive for miners. It's harder. There's consolidation within the industry. So what you're seeing is that given all of these mining companies, some of them, and some of them very successfully, are starting to pivot towards using that infrastructure that they have that's previously there for mining Bitcoin to, power what are their data centers, to power AI services,
right?
On-demand services. And so I don't think that, the market has fully sniffed this out just yet. There's some risk associated with this. But when you think about crypto miners, everybody just simply thinks about them as Bitcoin proxies and being highly correlated to the price of Bitcoin, where they have higher volatility. So when Bitcoin goes up, they do a lot better. But when Bitcoin goes down, they do a lot worse. I think over time, you're going to see that correlation break down. And while they will benefit, if they still are mining Bitcoin, from a higher Bitcoin price, they're also going to benefit from leveraging their infrastructure to provide AI services, which is a much more profitable business versus mining Bitcoin. So early days, but I think there's a lot of value unlocked, to use that term, if you see some of these companies successfully shift revenue from 100% Bitcoin mining to 60-40, 50, In some cases, there are a handful of companies that have completely pivoted away from any sort of crypto mining and are now really seen as AI data center plays. So no recommendations or anything, still doing some work on all of this, but just to run through a couple key points here, right? When you think about how much revenue you can generate off of the power that you're using, when you look at AI, this is 10 to 20 times better or greater than what you're seeing from crypto mining. To put that in dollar terms, some analysts look at this and say, okay, it's 1,500 to 4,000 per megawatt hour for crypto mining, for AI services versus like $80 to $150 a megawatt hour for Bitcoin mining. So significantly better.
It's changing the way these businesses are looked at, right?
Absolutely.
So like in the past, I think they've also, I think you mentioned this, but they like traded as proxies to Bitcoin price, or like a way for like mainstream investors to get some exposure to the crypto theme, right? And so then they ended up trading at the same volatility, if not higher, as Bitcoin's price. But now these switching to this AI infrastructure build out or provider allows these companies to be valued at much higher multiples.
Yeah, there's risk associated with this, right? A lot of these companies carry a ton of debt that's required. Obviously, you need to spend a ton of money. There's huge CapEx outlays in order to build this infrastructure and to continue to grow. But they have partnerships with the hyperscalers again. And so you're seeing partnerships between some of them and Microsoft, Google. You've also seen or have some examples of those companies that were kind of involved at times or involved with crypto mining that have made that pivot. That's a CoreWeave or an Applied Digital, a handful of names that I can run through quickly that I think should be on the watch list, right? And everybody needs to do their own research. But we've put together a list of stocks. They're very volatile. So I want to make sure that first and foremost, everybody understands what they're getting into. They all have around the same market cap. So similar sized companies here, but those that are on my radar: IREN, IREN, Cipher Mining, CIFR, Core Scientific, so that's CORZ, TeraWulf, WULF. Those are just a handful of names. Some are farther along than others in making this transition, if that's the direction that the whole industry is going to go in. But what is interesting to me, Dan, is not so much, okay, this is happening, but like, is it actually apparent in the market? And correlations can change, of course, but what we have seen is that strong positive correlation between the price of Bitcoin and the performance of these equities. It's come down over time. And that's what I'd want to see continue as a signal that they are in fact diversing away from solely just being a Bitcoin proxy. And so when I look at some of those that have really seen it kind of fall in the correlation, IREN, last time I ran these numbers, 0.35, Cipher, 0.40, Core Scientific, 0.37. So that's kind of one of the ways that I would start to look at these just from the market data that's available. But the way that you can probably think about playing this is just going out there and finding an ETF that's going to have a decent portion of the portfolio in these names that I'm listing off, in addition to some of those others that are already more of the pure kind of data center play.
Sure.
And so when you look at where's that overlap that has these miners that maybe are transitioning here into more AI companies, and also has some of these, kind of early miners that have made that move, a couple stand out to me, and that is the Grayscale Miners ETF, MNRS. It doesn't have a lot of assets, so it's not as liquid. That's something to consider.
What's the expense ratio?
I don't have that here in front of me, and it still has a very strong positive correlation to the price of Bitcoin.
Sure.
So be aware of that. But the other that maybe I would put ahead of it, at least today in terms of this analysis, is WGMI. We're going to make it, I think is what that stands for, right? Still positive correlation with the price of Bitcoin, has a lot more under management, 270 million, and has heavier weightings in some of those names that I've mentioned. At the end of the day, in a market that's bullish and is kind of reading this, they probably all go up together, but that's the broader ETF way to get the exposure versus some of those names that I listed, whether that's IREN, I have, some put options in that, selling puts there, just ways that I'm looking to add more shares. But those are the ways that, you could get exposure to this theme if you like the idea. But that's just one way to play AI. Like we said, there's a lot of ways that we're going to approach that theme.
Cool. Yeah, I mean, I think that's really kind of an interesting, it is an interesting thesis and it is an interesting development. I bought a couple of these. Hut 8 is one I honed in on and have done well on. I think that's trading up in the 60s right now. Yeah, I'm interested to see kind of how some of these shift and digging into some of the individual names. Obviously, if you just want to index it and play it with the ETF, makes sense. I think that the other thing I'd want to understand is truly like how these business models work. It's like, okay, yeah, you could sit there and say, you can make $4,000 per megawatt hour versus, what did you say, like $800 for crypto? But what is that? What do each of these companies? Where's the differentiation? Who has the more access to cheaper energy or better build out or more resources to build?
Yeah, that's a great question. I think as you kind of go through that list, you try to run some analysis around this. Yeah, who has the cheapest access to power, right? It comes down to efficiency. You need to be aware of debt. And then you also need to be aware of who has the deals lined up, right? Who has ultimately the capacity or the ability to build out the capacity. What we're kind of faced with in some ways are constraints here. Assuming that there's massive growth in demand for AI services and it kind of permeates everything over time, then the infrastructure that we have today just simply isn't there to support that demand and that growth in the future, nor is the power component to it either. And so currently, who has the most capacity to kind of alleviate some of those bottlenecks, right? If there's a GPU shortage or there's only so much physical hardware, who has that? Who has the deals lined up already? And you kind of have seen at times this like circular financing that's been set up. But I think a lot of that is funded, or it is funded when you look at it from the revenues that these hyperscalers generate. So there's risk, there's that bubble discussion, of course, but this isn't necessarily in all cases debt fueled. A lot of it's just being driven by actual cash flows and revenue from these companies.
And that's what you would prefer to see, is like, you don't want it to be like this debt fueled.
Well, that's, I guess, of course. And I do think that you get to a point where you see maybe an oversupply, right? We've seen that before with energy infrastructure, and we've had a boom bust cycle many times in the oil market, for example. We've seen that in telecom. You go back to the tech bubble. But ultimately, like as the fundamentals catch up or the physical reality catches up over time, you need that capacity at those lower prices post kind of that boom once you get that bust. So I think that's all part of the natural progression and evolution of it. But where we are today, in my view, is that you're not necessarily anywhere near that kind of peak where you have a complete overcapacity versus demand. So all that said, what do I get back to and look at here? Certainly efficiencies around, access to power and what those margins look like. But also who has the relationships in the deals and who's locked in some of that demand from these hyperscalers. So for example here, IREN, IREN, they have a 5-year, almost $10 billion deal with Microsoft. So what's IREN going to do for Microsoft? IREN is going to guarantee them access to their GPUs from NVIDIA. It's going to guarantee them access to their cloud services in a world where there's competing and increasing demand for this access. They're looking to as well expand the amount of capacity that they have over time. Another one here, Cypher has a 10-year deal with FluidStack, which is backed by Google. You look at the lease pipelines that some of these companies have, and as long as they're robust, that should be, one of the boxes that you check, that there's demand for the services that they're providing as they transition to using their infrastructure to provide these new services that at the end of the day are seemingly a lot more profitable than mining crypto.
Right.
That's at current crypto prices. Now, Bitcoin goes to 200,000. maybe we're not having this conversation and we're not seeing as much of an appetite to shift to AI. But again, I think you'll still have some revenue that comes from that, of course. We're only looking at, some analysts projecting that 20% of Bitcoin mining power shifts to AI by 2027. So this isn't overnight, of course, but I think that the AI theme certainly continues 2030. Let's start there.
Right.
You have some time, in my opinion.
Yeah, and I mean, I think some of these are probably at pretty attractive prices and valuations, and
Yeah, they had massive run-ups and they've corrected here. They're not going to be immune to any sort of larger macroeconomic risk or slowdown and any volatility in the broader market, but you're not chasing those highs from 3 to 6 months ago.
right. Well, it's interesting. Yeah, it's something. Again, we'll have to put a list together of at least a couple that individual names or ETFs that you would look into if you're interested in this theme. I'm looking at some of the stuff on Perplexity, and I'm looking at Iron and TeraWolf right now, and just trying to get a sense of kind of where they're, what their businesses are. So can certainly share some of that as well. But why don't we move on to sort of like wrap this up and just generally how you're feeling. We're calling, bull versus bear, and you're gonna play the bull and I'll play the bear this time.
Beautiful. Yeah. So when we talk about bullish versus bearish, we're talking about Bitcoin here. I mean, when you look at the environment that we're in, it's been pretty bullish, not in crypto specifically, but I'm looking at just everything from equities to credit spreads, precious metals. You're even now starting to see the unloved areas of the commodity market like crude oil start to catch a bid. Inflation seems to be cooling off given recent data, and the economy seems to be on strong ground, I suppose. So it's an environment in which I think you can feel pretty comfortable buying dips and taking some risk. But we haven't really seen that reflected in Bitcoin. Today, the price is like 97, but we've been trapped for the last couple months in this very, very tight range. So it comes down to, okay, do we think over time, and I'm assuming that we're both bullish, but short term here, whether that's 6 months or it's just 2026, have a fun conversation around, do we think that you revisit the lows or even make new lows first or at some point in 2026, or do we get to new all-time highs, revisit the high? It's about 126,000 when we look at Bitcoin. I'm in the camp that I think we still get to new all-time highs this year. I think that we see somewhat of an elongated cycle. I know a lot of people like to point to the 4-year halving cycle. And what that really is a cycle that has been pretty accurate since the inception of Bitcoin, where you see, the peak in the price typically occurs about 1 year post the halving. There has been at times a run up into the halving, you get the halving, and then within about a year, you kind of peak out. And that's been pretty accurate. I will say that in 2017, 2018, that wasn't necessarily the case. You did have an extension there. I think you have a similar setup this time. I think it does peak out, and we could correct significantly from there, but I don't think that we've necessarily seen that peak just yet. And the reason why I don't think that we've seen that peak just yet is largely driven by the setup that I see as it relates to liquidity in the financial market. If we did not have any of this kind of percolating beneath the surface, I wouldn't be as bullish, or I wouldn't feel as comfortable calling for, let's say, a new all-time high. That could be 130, it could be 150, but I think, there's upside there. And so I think that's really the biggest driver here, is that you have a setup where trillions of dollars in net liquidity is likely to enter into the financial system here. And maybe you look at that as occurring more so within, or the market kind of, it really, all that matters here is just rate of change, but the market kind of peaking in rate of change terms by, let's say, mid 2026. But that's due to the massive amount of debt the United States has to roll. I think regardless of where Fed funds probabilities for interest rates are right now, and you can look at this as they might cut 2 more times. There's some analysis that says, oh no, they're going to have to cut 4, but current probabilities are that there's no interest rate cut that will be made at the upcoming announcement. That said, we also know that Powell is probably he is on his way out. We just don't know who's going to be next and how dovish are they going to be? Are they going to bend the knee to Trump's demands for lower interest rates? Regardless, I think a lot of that's noise, because all that really matters here is that the Fed and the Treasury have to work in conjunction to kind of give the appearance that the U.S. is solvent, right? And we could argue that nobody really is in terms of how indebted everybody is. Point being, 30% of the U.S. debt matures this year, has to be rolled. And since the financial crisis and really around COVID, we have gotten into the habit of, where the Fed can control short-term rates, rolling and issuing debt at the front of the curve with shorter maturities. It's not like we're going out there and saying, okay, we need to issue $5 trillion in 30-year treasuries. A lot of this has happened at the front of the curve. So what I think you see as a result, and I'm kind of going all over the place here, but that's going to put pressure on rates. It's going to keep rates low. But that liquidity is coming to manage that volatility, to roll that debt. And it's not just the U.S. that has to roll a good chunk of debt that was issued, but many other larger developed countries. And you've kind of seen that play out on a 4 to 5 year cycle. And it's, this year, 30% of that debt is going to get rolled. In addition to that, I mean, you just look at all the announcements that have been made recently that are also net positive for liquidity. That's the people's QE, as they're coining it, in terms of mortgage-backed security purchases from the housing agencies that that Trump is directing. So we're looking at $200 billion in MBS purchases. You've got the end of quantitative tightening, and then shortly thereafter, we just saw the announcement of $40 billion in Treasury purchases, and that's again just out of the U.S. And you kind of have this setup where, and I think you can apply this to all asset prices, at least for now, right? It's not permanent. They're going to run it hot. You've got an economy that's growing, but at the same time, we're going to cut rates. Inflation hasn't really been the boogeyman as of right now, and we're going to spend a lot more money. So I think that just presents a setup where, unless you saw a massive slowdown in the economy, I think the liquidity picture is very robust for asset prices. And, crypto, Bitcoin being on the margin, something that's at times largely driven by just that liquidity cycle, I think could stand to benefit. We'll see.
Okay, so basically you're saying that the macro setup, in the sense that there's going to be more liquidity and cheaper, the ability to borrow cheaper, should give a boost to risk assets.
I'm saying that setup basically alludes to trillions of dollars in net new liquidity entering into the banking system that will find its way into assets and will result in asset price inflation, as it has historically. And historically, one of the biggest beneficiaries on the margin, when we look at the most volatile asset price inflation, when you have liquidity injections into the financial system, has been Bitcoin.
Okay.
Has it also at times been gold, non-yielding assets in an environment where real yields have fallen. Now, real yields have been somewhat stable recently, but you're seeing this already, arguably, in the prices of precious metals. Gold and silver are somewhat different. Silver has some physical market supply constraints and other variables that are impacting the price. But platinum, gold, palladium, industrial metals, silver, copper, etc., it's all kind of moving on this. And I think that there's a real force in play that's supporting that. I think that supports asset price inflation in other areas as well. Bitcoin, again, being one of those areas.
Got it. Okay. Well, again, we are talking about Bitcoin here with this bull bear case. Again, long term, I'm long Bitcoin. I'm going to continue to hold as part of a portfolio. So, but short term, this year, I think we continue to trend sideways, if not lower. And my viewpoint is that the macro, what you just discussed, does not matter that much for where Bitcoin is right now. 2025, end of 2024, 2025, we saw the huge meme coin cycle. We saw the basic kind of flows into Bitcoin. People get rich into Bitcoin. They move further on the asset curve, go into meme coins, go into all this stuff. This speculative hype bubble kind of deflated the end of 2025 here after October 10th and some of this deleveraging stuff. So I don't think we reach new all-time highs in 2026, or at least over the short term. I think we trend lower. Your macro setup makes sense, I think, at a high level, and I think a lot of people argue that. I think that's generally a multi-decade thing that we see play out that does push Bitcoin to $1 million. I mean,
Yeah, currency debasement.
right.
Right.
Any of that. But where we're at right now, I think if you're talking about new liquidity coming into the banking system and where it's going to flow, I don't think it's going to flow to Bitcoin as much. I think it's going to go to commodities, precious metals, the AI build out, energy, and defense, and whatever opportunities exist there in private and public markets. So I think there's better trades and better investments that most professional investors or people that might be tapping into this liquidity environment that you're talking about. I think that's where it goes elsewhere. I don't see this like COVID helicopter money, everyone stuck inside, gambling on Robinhood environment that we had in 2020 or whatever, 2019. So I just I don't see any reason for Bitcoin to make all-time highs. And then the midterm election risk. I think that there's a big midterm. I think there's a risk that this positive administration and kind of this free for all and launching stable coins or whatever he did, whatever Trump did, meme coins. I think that changes if there's kind of a shift in, I guess, toward the Democrats taking over the House and Senate, or I don't know. I'm not a politician, I'm not into politics, but I know that there's this midterm election coming up that could shift power. And from what I can tell, some of these people don't like the laissez-faire approach of crypto that Trump took. So I think that there's a risk there. So I think we trend sideways. Maybe we break over 100 in the short term. We're up to 97 today, but I don't see us going to 150 this year. I think that probably is a little further out.
Yeah, as you mentioned, there's a lot of other assets, areas of the market that are clearly in play right now. Bitcoin is kind of on the back burner, at least for now. But that's why on this show, Dan, we're going to go anywhere, everywhere, trade anything. I'm excited about it, man. I think it was a great conversation today.
Yeah.
Going forward, we're going to have some guests too.
Yep.
I think Greg Magadini is on the calendar at some point.
We'll find, and we'll talk to anyone that has some credibility in what we're trying to cover, and Greg will be great to get on as a smart trader that's had success and covers this stuff pretty regularly, both on like the macro and commodity and Bitcoin side. No, this was fun. I think as we get along, we'll bring other stuff to the table. It doesn't just need to be like crypto and AI. It can be, anything. And I'm excited to get into like prediction markets.
Yeah, the Kelshi ads I'm seeing are like bet on the weather. So, inevitably that's where we're going.
Yeah. But I'm going to bet on lunch.
Okay.
Bet on what the menu is going to be next week for tasty.
We can do that too. I mean, there's enough consistency. You might have a little bit of edge. But if there's any topic that anyone would like us to discuss, you have an idea, you have an investment theme you want us to break down or do some of the research on, put it in the comments. We're going to try to do the show once a week, give or take. It'll be on the tastylive YouTube channel. It will be on Spotify and wherever else you love to get your podcasts, Apple, Google. I'm sure there's other platforms. But trying to get it out every week, and we'll be back next week.
Awesome.